Wake up, God damn it! Welcome to MARKETcast with Unk and Market Monk. Morning, P. How was your week?
Really well. Hit big on some solar stuff on Monday and didn't really need to do a whole lot after that. Just went pretty light and did some like MSTR puts and some setups that I've been looking at for a while. Was really interested in following the copper had a pretty big pullback. Caught that with Rio on the downside, so kind of interested in where we go from here on a lot of that stuff. And kind of boring in the indices. I didn't really touch those too much. Um, I mean, people scalping 50 cents on SPY, just not for me. But should be a pretty big week this week with all the earnings, I think.
Yeah, it was. It's funny. It's funny that we both kind of had a, in retrospect, a light week. Monday, Tuesday were pretty good, especially coming out of voice. The top three actually worked well for me, so I'm glad that we implemented that last week. I had a Wednesday bias already to kind of tread lightly and just kind of stayed away Wednesday. Thursday, I had some personal stuff keep me away from the market. I went and helped some friends out. And Friday, I got Wish pre-market and kind of took care of the afternoon for me there. But it's a less is more pick and choose type of market right now. If you're trying to force trades at every level rejection or every time of the day, um, probably not going your way overall. It's almost like
Well, yeah,
swinging at every pitch right now. You don't want to be doing that.
and so for one thing, oil did not take off last week like I thought it would. I didn't really get heavy into anything. I'm kind of looking at. I'm working into some August to November stuff there because I think the summer is going to be where it gets pretty good. So anyway, that being said, those weren't really firing off, and that was one of the major things I was looking at. So I'm not just going to replace that with something else at the last minute. And then, with the solar stuff, Enphase worked its way up to what I thought was going to happen over the course of a week in one day. So, at that point, I'm like, I kind of took a step back. I took caught most of that move. Um, Took contracts like 200, um, and most of them I got rid of at like 450. Took one to $900. So I'm like, okay, that's kind of good for a week. So I just there's no reason to then kind of try to force the issue after that. And so that's kind of where I was. Um, as far as that went, the crypto falling off. Kind of saw that coming a bit. Mainly was focused on MSTR, but you kind of saw coin breaking down as well. And again, I mean they got people again with this move on coin, and then everyone's thinking like 80C, 90C. Whales sell a ton of those, and then it just collapses. And this is like the I don't know fifth or sixth time I've seen that happen.
Yeah, it seems like Bitcoin just got a little oversold. 27,
Yeah,
28 levels
yeah.
where it needs to be. Continuing to like 35 is kind of a joke on that. But I mean, that's where you'd have to go for coin to hit those levels. Um, I was kind of in the shorter ones, or I guess not shorter ones, the shittier ones. um,
Yeah.
but there was a lot of like Riot and Mara was pretty much just like shorts getting squeezed a little bit. It felt like, or trying to get out of their positions. Um,
Yeah.
but when those fall back down, they're the moves are kind of like they don't stop because they do have to get back to a level of support, or Bitcoin needs to pick up for them. Um, so I'm still a Hut and Hive type of guy. Um, which you just got to wait for the cycle of Bitcoin. And people don't do that. They wait till it's like at all time highs and want the next all time high, or yearly high, I guess is what we should say. And they want the next yearly high in it. And it's just not the way to play that. You got to play it when Bitcoin's oversold. Um,
Yeah, the popularity of coin when it gets over 65 is always just kind of curious to me because really, I mean, 68 is just about it. It does go over that. It does, briefly. It'll pop up to the 70 or like 72 or something like that. But it just can't. It can't build any support up there. So the people who, especially the people who talk about entering at 70, you're looking at a $2 move on a 70 stock, and I always look at I want more room above than below, and it's definitely not in that category. The coin is not running back to 95, $100. As far as the miners go, yeah, those pullbacks. I mean, those 6, 7, 8% down days are really really common with those. You just got to kind of know what you're in. When I see something like FCX drop 5% in a day, that's rare and that's a massive move down. But it's not for crypto stuff. So just knowing the character of the stock that you're in, I think that's really really important. And then one more thing on my setups I post. They've been working really well, and I think one thing to understand, about those is when we talk about rinse repeat in here, a lot of times that's not rinse repeat 5 times in the same day. It's a setup that that plays out over hours, usually days, sometimes weeks. So, don't, if you succeed once trading something and you catch a good move on it, don't feel like you just have to jump right back in. Like I trade a lot of those once, maybe twice, but I see people 3, 4 times entering the same exact thing. I don't really understand doing that. I think it's kind of diminishing returns. You're kind of raising your risk, especially like on a Friday. Things quiet down. A lot of stocks are just going to try to find a kind of equilibrium towards the end of the day. So it's really not the best spot to be trading, especially on the option side.
Yeah. On the share side, it's more about the current level or the level it's rejecting. But yeah, like you're saying, it's not an everyday thing. If you can get every couple days, um, that's a really good setup in my opinion. Like that's the best it's gonna
Yeah.
get. And then you have to also understand like that range is gonna it should slowly be limited, right? Like ASTS is the last one I could think of that worked real well on the share side. But we were getting 550s to 620, and then that went to 580, and it just gets tighter. So the setup in those rinse and repeat plays, um, yeah, 2 or 3 is usually all you're going to get really good. Occasionally you get one that's a little better, but usually it's 2 or 3, and it's usually over like 2 weeks. Um,
Yeah. Yeah.
every day, 3 or 4 times a day, that's real rough to find anything that you're going to be able to trade 5 times in one day and be successful. That sounds crazy to me. Yeah, I guess unless it's a one of those 2 million float pennies that moves $8 or $9 throughout the day, but just not. I think less. That's where less is more comes in, right? I mean, there's
Yeah.
a yin and a
Yeah.
yang to less is more and rinse and repeat, I guess, in what we do. A big week.
Yeah.
Go for it. Go for it.
Yeah. Oh, yeah. Well, yeah. I just kind of last thing, like me as like in that kind of teacher role, like I do try to stop myself. Like if someone makes trades I wouldn't make, like that's not automatically bad. But I do think there's kind of a tendency I see, especially with newer people, to feel like they have to leave a runner, to feel like they have to stay in something, that they have to roll it, or like they start to get enamored with that concept of staying in and like keeping some exposure in something. And a lot of the stocks that when I'm posting these large caps and mega caps, when they make a 3-4% move up, that's a lot, and there's going to be some pullbacks and sell-offs there, and there's really not a reason to stay in those when a new setup's going to come around and you can just you can just re-enter, like end phase off 220, several times. When it goes up to over above 230, why am I going to stay in that when I'm kind of seeing that it's likely to come back down? It's got earnings next week, so I don't want to hold through that. There's going to be opportunities after earnings. Like there's all these reasons to just go ahead and just get out, clear everything out. And for me, like it's kind of a relief to just clear most of my stuff out after a good day and just not really have much to worry about. Anything I have is like leaps and some shares and things, but that desire to stay in stuff, especially shorter expirations like monthlies, I don't think that that's a great idea, and I think people learn the hard way on that. So don't feel like just because you know how to do it, how you know how to roll or leave a runner or whatever, don't feel like you always have to do that. That's one thing I've noticed.
Yeah, you got. For me, it comes down if you're following some guy on the internet, including us, and you're getting 30-50% on the option side, or 7 to 12% on the share side, just take your money. Um,
Yeah,
it getting a piece of it instead of thinking like, is this the one? If the one will be the one you do a lot of work on, you'll have a reason for it to be the one. You'll have a thesis behind why it's going to be the one. But if you're just reading a note and following a play, just take your money and try to repeat that process of just taking your money, not of getting the most out of the fruit every time. And that goes
yeah,
for anybody you follow or anywhere you get information, in my opinion. Um, it's kind of how you stay safe in that. I don't know. Big week though this week. Lots of ERs. Man, I remember we used to play them a lot more, and then we kind of went to just read the report. But almost to a point now where if you're not doing the homework on the front end, there's better fish in the sea. The sympathies are better to me. I don't know how
yeah.
you're feeling about ERs nowadays, but I just don't think
Yeah.
we're
So
we're in a good time of the market right now for ERs.
I was actually really confident about Tesla falling off.
Oh yeah,
But I still didn't hold through it. So like I did really well in the lead up to that, like 300%, I think, on the option side there. And then I just, I got it the next day because I was like, I actually did calls at first because I was like, it opens 9% down. It's probably not gonna just fall off a cliff. There's gonna
sure,
be people who buy it. And then it fell right back down. And when you're doing the options, that IV drop made everything cheaper, made it less risky. There was just no reason to do that. There was just no really Tesla had no chance of having a good report this time, but you never know like what Elon's going to say, or they'll do a buyback, or something like that. So it just wasn't worth holding through that. The other thing that happens a lot with earnings these days is you get the big initial drop, and then they come right back and you're stuck in options, and it just kills them. Like Netflix did that. Everybody's trying to catch those moves we used to get, those 20% down on the mega caps. They're just not going to let that happen in this environment. So it's not worth it as a lotto. You can say, well, I'll just throw $30 at it. Well, you're just throwing $30 away. There's no reason to do that. So yeah, I'm completely with you. There's better setups, better ways to do it.
it just seems so far. I mean, we're this week will tell the tale, but going into it, it seems so far that guidance is way more important than anything else they're saying currently. Um,
Yeah, FCX showed that for sure.
yeah,
Bad guidance just took it right down. Yeah.
yeah, it's the market. So that just tells me right away the market's worried about the next 6 months, not what's already happened. Um, which it's
Yes.
and it's ultra
Yeah.
sensitive to that right now. So, yeah, Tesla. I think we covered that well.
Yeah.
The downside part, and it also goes to show like if even if you have like the right direction, right thesis, everything's playing in your favor. There's still other variables, especially on the option side, that make it risky or not playable, and that's a hard point to get across to people that are adamant they know what's going to happen in the equity side. I mean, I'm a
Yeah. Yeah. I mean, especially like when you're you get up on that run in, that run up or run down, whatever. Um, you have to understand that if that price opens close to where you are, that premium on that option is still going to collapse because of that drop in implied volatility. So it's like if I already got 4% down on Tesla, on the lead up to the earnings, yeah, it went down and a lot more than that, but I didn't know it was going to do that. So you just get out and you get back in. So hindsight, there's just no point in it. I mean, you can with options. It's like the worst kind of post I see in the just everywhere. So I'm not picking on anybody. Is the wow wow ticker like, and so it's like should have had puts, should have done this, should have done that. We have so many setups where you do have that opportunity to get in early. And whatever you're saying wow about is not surprising to the people in this room on a lot of those stocks. So that's where the planning and the work come in, and the breaking the bad habits of chasing and FOMO and all that stuff.
Yeah, I don't know how the option chart for the ones you play regular, like if you're trying to play something 2 or 3 times in a week, um, how the option chart doesn't dictate when you buy and the equity chart does more. Like I would still be watching the option, and when that lines up with the equity price, then you kind of trade it. But people will just be like, well, like coin's a good one. Coin's going to 70, so we just get in options now. It's like why wouldn't you look at the option chart and see where that's at as well? Because
Yeah.
it seems like a lot of people buy the not the top, but they buy the top for the day on
Mhm.
on the option side. So like the contract price doesn't mean crap to them when I think it should be really important. I mean,
Yeah, and you're completely right, and it's why I every time we gap up or gap down, like I talk about do not chase that at open. Um, Part of the reason for that is in that first 5 minutes, that premium price is really juiced up and it calms down. Um, you know, 15, 20, 30 minutes later without the underlying price even doing that much, just because the people who held it overnight, they're all getting out of it, and it's that brings the price of that option down. It's not enough to bring the stock down, but like you get a much better option price on that secondary move than you do chasing the first move.
yeah, and for me, I mean, the moving parts on the option still is too much, but it seems like there's 4 or 5 things you should really be paying attention to. Um,
Yeah,
Option price implied volatility just come to my mind right away that people they just don't. They're more worried about like the where it is. Like let's use SPY, like where the level is on it's 415. Do we buy puts here? It's like there's some other stuff that should be going into that than just where the equity's
yeah,
at. And I see that a lot in our
yeah.
room. And as not an option guy, it's hard for me to address. But it just if it doesn't make sense to me, it probably shouldn't be in your option game. Um, yeah, just because I'm as not as a share trader, I don't use those metrics, but they're blinding. Those are the reasons I don't play options is because I don't understand those extra 4 or 5 things that you really should be paying attention to. Um, yeah, I don't know how to put that into like a sentence, but it's basically like not taking your batting gloves and your batting helmet to when you're going to hit a pitch. Like you need the 4 or 5 things to keep yourself safe, and they're just completely disregarded. It seems.
Yeah, it's like when I do those, when I list out those contracts with the notes. If I'm listing out something for August, there's a reason I'm doing that. I mean, it's not just like I'm randomly doing it. It's not even just because that's what I saw the whales buying. It's because of where the stock is, how long I want to stay in this play, how sensitive I want this option to be to that underlying price. And so usually for something like August, what that means is I don't want a 1% pullback on a day to shake me out of the position. So I need some room. I think learning some basics about the Greeks is important. I can't sit here and rattle off everything about gamma and delta and and all that. I know what they are, um, and I just have enough experience where like I know how the option is going to behave if the stock does A, B, and C. And our whole thing is about when the stock gets here, you enter for a move to here, and that finding the options that align with that is important. But the thing that you always say on the option side, you have to time it better.
Yep.
And that in and of itself is why I play a lot of those in that kind of 80-20 thing where most of my position is in shares and then a few are in options, and it works pretty well for me. So the option only traders who are asking me about doubling their accounts and all that, like that's not really how I approach things. So it's hard for me. I can't teach something I'm not doing, and that's just not what I do. So um, definitely want to rethink that, I think.
Yeah, I mean, I guess it's just that next step for us. I mean, it took a while to get people to buy, at the money or one strike out of the money versus what they can
Yeah,
afford. But
right.
it's just like the next thing, the level two of what I'm seeing that people do. That again, I guess you said it best right there. They're just getting their timing all wrong. They're entering for the wrong variables instead of worrying about the proper time and the way proper things should line up at that time. Um,
Yeah, and I think too, like someone will you buy something way out of the money for $30, and it's like I'm risking less than if I were to enter this for $210. You're actually risking more because it's such a low probability that that thing that you bought is going to do anything. So you're going to take the 30 to zero. Whereas if you bought the $210 one, you can say like, well, I'm going to put my stop at at 190, and it's going to move very well to like 250. Just if it bounces off this line, and then I just go ahead and get out. And so it's spending you get what you pay for.
yeah,
It's a spending less isn't necessarily a good thing. So so yeah, that's part of the process
the
too.
double zero on the roulette wheel doesn't really work all the time.
Yeah.
Exactly. Yeah. Also, I got GDP. Um, Kind of curious on what you think about that, and PEC, which is um, Fridays. So kind of that'll be odd one, but I think GDP is gonna affect the market for maybe not Thursday when it comes out, but for the next couple weeks, just on that recession talk again. If we do get below the 2%.
Yes. So I think we've been in kind of a cycle where the data has not necessarily been great, but hasn't had a big impact on things either. But I think that that could definitely be changing, and I think there's kind of limited upside in a lot of this data that's gonna come out. So it's just a question of have they brought the market up to a point where we could have a significant pullback and still not be in kind of a danger area of you know like those October lows or whatever. So yeah, I think I'm a little bit pessimistic on the data coming out, and I do think it's gonna pull us back some. But we might recover quickly. But I do think there'd be some downside.
I'm waiting to start hearing first of the year or January lows I mean, because October lows seem very very far away.
Yeah,
Um,
yeah,
to me, we're a higher low from that, which would be the right around the first of the year, just year to date. Or excuse me, current year, however you say that, will be more important than those October. Those October lows were really low,
yeah.
and what it's going to take to get there, I just don't see a lot of things giving that much up. Um, it's kind of with the gradual recovery. That's a good thing about it is you do build support levels along the way. I mean, let's just use Tesla. Like 184 was huge on Tesla, and it stayed there until it had a reason to go down. Um, we now have the 150 level and 139. 150 is just a psychological level, in my opinion, kind of like 100. But 139 was like the other support level down there. But it's not going. I don't. see us dropping all the way back to 100 on some slow bleed out there. And you could say that same thing for Nvidia or Netflix or all the big guys that um, kind of do push the market a little bit. Like they're just not. Even if they check back 50%, we're still at a higher low. Um,
Yeah,
so I
yeah, and that was so where my skepticism about, and this was in my notes a lot, that about my skepticism about further upside for um, SPY QQQ, like that it was fairly limited, um, just because Apple was so close to all time highs,
yeah,
and it's just not the environment for Apple to hit all time highs. And I don't trade based on what I feel about it like that, but the flow also isn't there in the summer that I would expect to see for it to test those and break through. So that given the weight that these five mega cap tech stocks have on everything, that yeah, I agree that those can pull back. The big misread from all the bearish people, like the two that I saw, was thinking the October lows were the beginning of
yeah,
the the plummet, right? Like
yeah.
that was like you'd see accelerated selling at 3,800 in SPX, which is the opposite happened. And then the other one was the big flip thing, where this whole idea that there was this big regime change um, in the market just did not pan out, and anyone still sticking with that is just being stubborn and just not admitting that they were wrong, because even like we get a pretty big jolt down and it would just go to where they said the big flip was starting. So it's like
Yes,
if we're gonna pull back to your short entry, your short thesis was wrong, and that's kind of where I'm
100%.
on that.
Now, Apple's probably the really good one, and I mean, yeah, we're at all-time highs with that. Even pulling back to the 148, which is the next support down for me. That's a dramatic move down from here. That's probably possible, but getting those 129s that we got in flipping Octoberish is not happening. There's just no way that's coming that far back in my opinion.
Yeah, and and frankly, it can go ahead and pull back to the 140s. I'm not gonna sell my 129 shares I bought, because that was just a long term hold for me, and I'm not it wasn't like a swing trade or anything. And I don't care if it loses 20-40 bucks from here, and whatever, because I still think that 129 remains just an excellent entry on it. And if anything, in the 140s, I might just add a little more. So that's kind of my just how I operate long term about around what's happening.
Yeah, I don't think you're getting that again. I would keep
Yeah,
those as well, and the same with the Nvidias, 108s or 110s, whatever down there. I just don't see it, or the Tesla hundreds. I don't really see it. I think the worst is they have range to figure out. It's gonna feel sideways for the next rest of the year, but
yeah.
the all time lows probably ain't coming back. The all time highs breaking probably ain't gonna happen either. So there's your defined range. And, unless we get a handle on inflation into war or something like that, which doesn't look like our country's wants to really do either of those two things.
Right.
So here we are. Rotating to SPY a little bit. Um, oh wait, let's do PEC real quick. That's Personal Consumer Index? Isn't that what that is?
Yeah, yeah.
Yeah. So that's everything, I believe, without doesn't it not include like gas and food? Isn't it everything but gas and food or something like that?
Yes, which is always the thing people point to for whatever they want to say about it, how much it matters or don't. They'll point to that. Yeah.
And point to that. Yeah. So it still includes housing, I believe, or shelter as they call it. But I think that'll be good on Friday, um,
Yeah.
because energy is the dang kicker right now. I mean, we're back to 440 out here on gas. Um, so the fuel to just even get goods around right now is outrageous. Prices aren't really coming down on most things, in my opinion. So um, when you take those two out, it seems like you could get a decent report. How the market reacts to it, though, again, um, those has kind of just been shrugging off.
Yes. And one kind of a something I follow. I can't say I follow. I haven't followed it for like a long time, so I can't say how odd this is. But it definitely it strikes me as strange how this rotation in staples, where it's like milk goes through the roof, and then eggs, and then they fall way back down, and then sugar now is like going crazy. I remember this with lumber like
Yes.
last year, where there's just these singular products or materials, whatever, that just spike just like crazy. So everything's still just sort of out of whack. I don't know if it's logistics or or what it is, but there's always these outliers, and they just seem to kind of rotate around, and take advantage of it when I can in the market. But that that's something that kind of sticks out to me is as well. It's just prices seem a little bit chaotic in different areas.
Yeah, no, the big stuff we follow, which is more metals, materials, and the gases, the fuels.
Yeah,
Um, they kind of got stable the last 2 weeks. Oddly
yeah,
enough, like it's been weird to see things kind of just hold a level and not be, um, I don't know, not really make a run in either direction, which is what we had for quite some time. I mean, even like gas, crude oil got down to, didn't we get down to 60, like 68, 65, somewhere in there, and
yep,
it ran back to 80. But as soon as we got to 80, we kind of just parked, 77, 80 range for the last week, um, which is normal, right? That's how commodities should be. They shouldn't be all over the map. But we're seeing
right.
it, like you're saying, we're seeing it in other, it's getting into the food and stuff. So just watching commodities in general the last couple weeks kind of gave me hope that we were finding stability. But like again, like you're saying, the little ones pop up here and there, and I don't know how to trade sugar though. I don't know how do you trade sugar.
Yeah.
Full port.
Yeah, I mean, I don't want to, buy sugar futures and then get a crate of sugar delivered to my door or something. I don't know, but yeah,
Oh,
yeah. There's a few stocks it affects, but it's not as direct as the other stuff.
let's grab the spy, the weekly spy. You and this 420. I've
Yeah,
been wanting to
yeah,
ask you about it all week. You still feeling that number, or you had it 2 weeks in a row? Um, I just don't see us getting there, P. It's a lot of, I don't want to call it resistance, but
yeah.
it feels like 16, 18, and it just pops back down every time. It likes 412 a lot though. The market loves 412 for some reason.
Yeah, they couldn't bust it through. I was kind of thinking like if Netflix had a big beat, which was there was a possibility of that might have kind of pushed things along. But yeah, no, I don't think we're going to see 420. Uh, Probably not this week or the next couple weeks. So upside's a little bit more limited, I think.
We were real tight last week. You had 420, 404. I had 418, 405. We ended up 415, 410. Um, so we were both a little more range than this dang doji we got. Um,
Yeah.
I'm since I was slightly ahead because I had smaller range. I'll go first here. This week, it's gonna be volatile. I can't see us being locked into this these weeks. I mean, we're two out of the three last weeks have kind of a little doji, which is just no movement, $5, $4 or $5 range on SPY. Um, I'm gonna go with the 407 this week because I do think we have a higher bottom right now. And then the 418 is still gonna be my top. Um, I just don't know what it's gonna take from a TA side to break that, but it seems like it's gonna have to be a lot. um,
Yeah.
so I'll go 418, 407, which gives us $11 on the range this week. I still kind of tight, so I am going after what we have this week, but all the reports won't be bad, all the reports won't be good. There'll be some volatile days. That's kind of where I see it sitting.
Oh, good. Yeah. So I'm gonna go 406. on the downside. So a little bit more there, and 416 would be my top.
Ooh, okay. Do those stand out for a reason? Like in
Yeah, it's just some of the open interest on some of the strikes I'm seeing. But also, I kind of have more of a handle on QQQ, and I kind of look at what would be sort of comparable to that. So like QQQ 310 to 312 kind of stands out. So that's kind of where my downside's coming from,
okay, yeah,
and then the upside is just those recent high to make another attempt at that.
that 321, 320, which it's ran into 4 weeks in a row here.
Yeah, yeah,
That's interesting. Yeah, I don't really watch that one too much. Um, I don't watch many ETFs too much if they don't have a product behind them. I like the colds and the boils, the drips and stuff
yeah.
like that, the gush. Um, but yeah, your 304 call, we haven't got back off that for a while. So tech's up. It seems like in general. Um, but man, I mean the day on the weekly chart, it's definitely running into a ceiling. Um,
Yeah, for sure. And the you know on Friday, tech was kind of interesting because Apple gapped down on PC shipments like 1.5% or something like that, which normally would just crush the QQQ, but Amazon was doing so well that it kind of balanced it out a bit. So it fell back like 0.5%, and then and then kind of took off from there. And that's kind of been the thing. Like sustained selling has been rare in tech lately. So it's going to take something big. Could be earnings, could potentially be some of this data, but you're just your inputs. You want to be pretty quick. That's kind of been the deal lately.
yeah, I mean, most of those tech companies are their own animal too. Um, Outside of
Yeah,
our software as a service, you really don't get too much sector. It's almost dog eat dog world over there. If a company does bad, someone else has to do good. It's not that they all do bad because one did bad. Um,
yeah, absolutely. And Google's been interesting. We had just a perfect entry on Google, but in a lot of ways, Google's kind of botched this whole AI thing.
yeah,
And I'm just sort of interested in if or when they're going to see some impacts of that, or if they're just going to kind of right the ship and it's not going to be a big deal. But yeah, that's been interesting to me, and I haven't re-entered Google since our entry on it. It's a little trickier up here than it was, where we were like 92.
yeah.
But that, yeah, it's definitely one I follow as well.
Well, it's that's surprisingly that's one on my list that we'll definitely cover in the next session. Um,
Yeah, no, I watched the video. Yeah.
yeah, no, okay, because yeah, what you just said is basically exactly why I'm interested in it up here again, or interested in what you have on your side.
Yeah.
Anything else before we get over there? Um,
Oh, so I posted. I wanted you to look really quickly, and I'll do it here because it is a sector deal more than an individual stock
okay,
thing. But XME, which
two
is the
two X's.
um, just one X,
Oh,
just XME.
XME. Okay.
Yeah. So this is the metals and mining ETF, and I hadn't looked at this one in a while. I've just been on the individual names, but it came across the flow for me, and it's 48p, which is really bearish for May, but they're not really shorting it kind of below that. And I call it up, and I had a line here at 47, 47, 47. I don't remember exactly when I drew this line, but I think it was in January 22 when that was acting as resistance, and then it pulled back and busted through that. So that level was interesting to me. And then FCX falling under 40 makes up 5% of this fund. So, there's kind of a convergence there. So I'm just curious, as you just look at this chart, your impression of it, just kind of where it sits now.
Yeah, no, I like that level you have. That's totally the support resistance flip from when you talked about. That's really good TA there, P. Um, Not taking that spike in 2021. If you kind of take that out of the equation, um, I would be looking for the flow back to the 58s. But I think you're kind of range, but you're getting range bound, and it's trying to figure itself out um, in between, let's say 48 and 53. Um, it needs a reason to go higher and a reason to go lower. And I think that's where a lot of stuff is and is going to be the next 6 months of the year.
Yeah.
We had the big flush. They've proven their worth since then, but there's no reason to go up, and there's real no reason to go down until you have either some tailwinds that are helping you out, or a new product or a new reason to get people excited. Like not to bring back up Apple, but I mean that's what you're seeing with the iPhone. People are buying less because they're lasting longer. They need another iPad. They need another watch um,
Yeah.
to have a reason to get more market share. So I think you're seeing that with everything. We're just figuring out this range we're going to be stuck in. That range will just get tighter as we go. I don't see this busting out to 60. If that's, I mean, there's no way, but I don't see it going to 45 either.
Yeah, that's kind of my take on it. And it's when I match it up, like FCX is the one I trade the most out of the holdings there. That is having that pullback. And what I'm kind of looking for FCX is, instead of falling to 35 like it did last time, that maybe it's 38 or 37, kind of a higher low, and then maybe go back. But like you said, FCX didn't even think about testing that 4650 level again on this last run. I saw that slowing down. So yeah, the range is getting tighter for sure.
Yeah, and I think you look for things. I don't like to mention tickers in here too much, but I think you look for things
Yeah,
like AA,
yeah,
where you are gonna get where you're getting pulled back and then it gets to oversold, and it shouldn't be there. Um, it falls out of that range. I think those are the better plays, especially in the materials right now. Um, those charts are
yeah,
becoming
absolutely. Yeah,
harder for me to play because they're in such a tight range without a dramatic flow read that's like this is going 40 or 50% on the equity side just in the strike
yeah,
short terms, and then we have leaps to
right.
100%. We're not seeing that right now, so I guess they're cooling off um, after
Yeah,
some pretty large runs. um, yeah, yeah.
yep,
I
yep.
wait.
With you on that.
It's like Mara tens for me. I just wait for you to tell me that it doesn't look right, and then I look at the charts for that. Like, but I just don't think we're there, right? I don't think you're seeing that anymore. Um,
Yeah, yeah. No, and they still work well on the option side. I mean, FCX 39 to 41. That's a big move in options. Isn't really much there on shares. So yeah, I'm with you on that.
Perfect, perfect. Yeah, no, I can't wait till the day come back because boy, I got a lot of charts that we follow.
Yeah.
Awesome. Are you ready to get to work?
Yep.
All right.